Hello Business 202. This accounting video illustrates the purpose of the statement of cash flows. We are discussing Chapter 16, and the illustration that you see on your screen, the Rundell Inc. Company, is on page 731 of your text. Here's the setup for the statement of cash flows, and most problems that you will get will be set up this way. You will have the most current year's balance sheet compared to the previous year's balance sheet, and then you will see a third column that notes the increases or decreases in each of the balance sheet accounts. Here's what an owner sees when they look at the balance sheet. Owners have a tendency to look at two items. Number one, the cash, and number two, what their income would be. And the income is shown in the retained earnings. And so the business owner will see, well, the retained earnings went up $80,000, but gee, cash only went up $71,500. So the owner will have a question about that sort of thing. Additionally, what the owner will do is to look at the income statement. So here on page 730 on Exhibit 3 is the income statement for Rundell Corporation, and the owner sees net income of $108,000. Immediately the owner will ask, well, if I earned $108,000 during the year and the retained earnings from the business, which represents the increase in earned capital that the business gave the owner, $80,000, why in the world did cash only go up $71,500? I, the owner, would want an explanation for that. Well, the statement of cash flow does that particular reconciliation. It reconciles the net income to the change in cash to explain to the owner why those two numbers may differ. Before we get into the details of the preparation of the statement of cash flow, let's look at the Rundell Corporation's statement of cash flow, which is shown to you in its finished form in Exhibit 6 on page 739. The statement of cash flows begins with the net income, because that's one number that the owners will look at. The second thing that the statement of cash flows does is to show the increase in cash compared to the cash at the beginning of the year, and then shows cash at the end of the year. So these items are reconciled. And it does so in terms of the amount of net cash flow that came about from operating activities, in this case $100,500, the net cash flow used for investing activities, that's buying and selling fixed assets, and then the net cash flow that would be used for financing activities. In this case, that would be $26,000. And if we would add the cash flows provided by operating activities, the cash used for investing activities, here they purchase land and building, which expands productive capacity, which is a good thing, and the financing activities, a net outflow of $26,000. Well, in this case, they paid bonds and paid dividends, and then got some financing from the sale of common stock, so they did reduce the risk of the business by paying down these bonds, and they provided for the owners by paying $24,000. Both of these are good items. So in seeing that cash only increased $71,500 compared to the increase in net income, the owner won't be as upset, because the owner will see a large portion of the cash payment went for the purchase of productive land and buildings, and that there was a sizable reduction in risk from the retirement of bonds, and that the owner was taken care of because the owners would have received dividends. Okay, so let's quickly go back to the beginning of the chapter where you see the balance sheets for the Rundell Corporation, and why do we always see this three-column presentation of current period balance sheet, last period balance sheet, and then the difference? the answer to that particular question is that it's based on the idea that assets equal liabilities plus owner's equity. So this entire representation is based on the balance sheet equation. The short story is that if we're trying to explain this change in cash, the change in cash can be explained by the sum in all of the other balance sheet accounts. So if you would get your calculators and add or deduct the changes in all of the non-cash accounts, it explains the change in cash. And so that will be the process that we use to solve for the statement of cash flows. The algebraic representation looks something like this. If we would do the same operation on both sides of an equation, we don't change the equality. So, for example, if we take the change in the assets and this delta represents change, the equality would hold true if we would take the change in liabilities plus the change in owner's equity. Expanding the change in assets to the change in cash plus the change in non-cash assets, we would get the change in liabilities, and expanding the owner's equity, we would have the change in contributed capital, that would be common stock, plus the change in retained earnings, that would be the earned capital. Okay, now let's deduct the change in non-cash assets from each side of this equation, and here we have the change in cash equal to the change in liabilities plus the change in contributed capital plus, well, the retained earnings can be explained by the increase in retained earnings brought about by current year's revenue less the decrease in retained earnings brought about by current year's expenses, less the change in non-cash assets. Okay, so here you have the change in cash being explained by changes in all the other accounts on the balance sheet, and it's this algebraic equation that allows us to show the two balance sheets and the change. If we can explain the changes that occur in all of the other balance sheet accounts, we will have explained why cash went up or down. In the next accounting video, we will demonstrate how to turn an example like this into a spreadsheet so that we can methodically solve the details for the statement of cash flow. Thank you for watching.